All right, it looks like everybody's in. Good morning. Actually, good afternoon. We're at 12:01, so good afternoon, everyone. This is David Feeks, owner and founder of the Parents Estate Planning Law Firm in Acton, and welcome to this month's Pep Talk. I'm going to apologize in advance if sunlight is going to start to dapple across my face. Um, Today, I am joined with or by a special guest and a colleague of mine, John Conte. And today's topic is a checkup for your financial health. John is the owner and founder of Oliver Capital Management in Concord. John is a certified financial planner with almost 20 years of experience in financial services and is helped over 500 emerging high net worth families and small business owners organize and simplify their financial lives. John runs a practice primarily focused on helping new families simplify their financial lives and create and monitor their financial plan to make sure that they're headed in the right direction to accomplish all of the goals they have for their families. So John, welcome to our monthly Pep Talk.
Thank you. Thanks for having me.
So let's talk about things that people need to be thinking about now, especially given everything that's been going on for the last 8 or so months between COVID and the election that just took place. What should people be thinking about? What maybe should they be doing differently with their money and their financial planning, given everything that's going on in the world right now?
So that's probably one of the biggest questions that I've received over the last, you can imagine basically going back to March. What now, right? And I think the biggest thing is just all your money should always be focused on what the end goal is, right? So if someone says, I want to retire, in a certain period of time, that period of time should be what the money is focused on and how it's allocated. We never really want to chase, follow our biggest mistake people make, I think, is just following emotions. So looking at what the end goal is and then making sure it's allocated towards that and then just consistently rebalancing. I think COVID has been somewhat of a nightmare for the markets, right? And it doesn't really make sense. I mean, anyone, I think, in the market would say that what's going on doesn't make sense. Even if we go back a couple months, we have record unemployment. The major cities across the country were literally on fire, and the market just keeps going up every single day. So today's no different, right? So, we had one of the biggest days possibly ever on Monday after the election. And it was an election that people said, if Biden gets elected, the market's going to tank because of tax rules, right? And still it somehow goes up. So where's this all going? Where it's going is nobody knew what was going to happen. And it was the clients that said, you know what, we're going to have another wave. We got to get out of the market. And then the market goes up and they want to get back in. And it's like chasing a falling knife. So I guess kind of a long-winded answer to an easy question. I would say that what now would be really thinking about priorities and saying, okay, well, we have our money. A lot of times it's all over the place. People haven't looked at it in months. So actually giving some thought to what is the goal here? What are we trying to accomplish with this money? And then putting together a plan around that. That's what I'm advising people to do, because we don't know what tomorrow is going to bring. We know it's going to be uncertain. The market's going to be volatile, but figuring out what our goals are in the first place, I think, is important.
And I want to touch on something because, I've heard a lot of this in the news, and I think some people get confused around the distinction between the stock market and the economy. And if the economy is, where that distinction is, if the economy is not doing well, how is it that the stock market is doing well? Can you talk a little bit about that distinction between the economy and the stock market, which are different things?
Sure. So completely different things. The economy is going to be, I guess, how we're personally affected, right? People out of work, businesses going under. Obviously, very low percentage of people out there are doing incredibly well, especially small business owners right now. Some are doing well, but for the most part, we're seeing a lot of businesses going under, and I think that will trickle down to the stock market. But a lot of the stock market right now is being driven by big tech, right? And a lot of big tech is driven by people working from home, right? If you look at some of these stocks, that have done incredibly well. And if you look at the indexes, right, so certain times clients will say, well, why is my portfolio not done as well as the market? A lot of the market's being driven by the, these giant companies, right? We think of, Zoom and DocuSign, right? Two random stocks that were pretty cool ideas a year ago, and now have done incredibly well. So I think for the sake of personal finance, we really want to focus on the allocation and the balance of how our portfolio looks, because it could ultimately trickle down, and it will trickle down to other things as numbers catch up. But there's just so much more that goes on behind the scenes, and between COVID and we're having record numbers every day, which are negatively impacting the economy. But the stock market is always going to be based on supply and demand, and people are so optimistic about a lot of these big companies being able to pull through this and innovate.
And what are you seeing, as you look back over the last 8 months or so, even back to the beginning of the year, are you seeing any mistakes that families are making, especially young families who are just starting out? And, what would be the distinction between a young family's ability to recover from any mistake and an empty nester's ability to recover from a mistake?
Yeah, so that's a really good point. So I think the biggest thing, and it could go back 8 months, but really it's just, we've always had volatility. So even if we go back 20 years since I've been doing this, or you could look at history going back, as far back as you can imagine, the biggest mistake I think I've ever seen people make is acting on emotion, right? And having a really bad day and be like, we got to get out of the market. I know we don't have a ton of time today, but there's some pieces that show when the market's down, people get out, and when it goes back up, people get back in, right? Because they think whatever direction the market's going is never going to change. So I think that the mistake people have is just, someone told me, it's like you treat your 401k like your face right now, don't touch it, right? In crazy times when the market's tanking, people saying, I got to get out. And then now the market's, right? Think about it. We bottomed in the middle of March, and some people that said, I want to get out, and then, because they were afraid it's going to go all the way down, and then said, all right, all of a sudden things turn around, they get back in June. Like, you literally gave up 40% returns that you could never get back because you acted on emotion, right? Now, if it's short-term money, if it's an empty nester that says, I need to retire in 5 years, absolutely. You probably never should have been in the allocation in the first place. But for people that have a long runway and say, this is my retirement money, or this is money, I already own my house, I'm not touching this for a while. The goal at that point is just to say, I'm just going to stick with the plan. I'm going to keep saving into it and not really mess with it. And also just having, what I found too, is people don't really have their house in order, right? Like I'm a client of yours, David, and it's something that my wife and I put off for a long time. We finally did it. It was an amazing process, which, I've told you, but whatever. So it was a great process, and now it's over and it's done. I think that now people have a little bit more free time on their hands to do things like that, where they could say, I know some of my clients that say, okay, I'll send you over the statements that you asked for over the last year. You've been asking for them, and I finally have time to actually just look stuff up. So I think to summarize, they're acting on emotion, and they're not utilizing this time as a way to take care of things that they've been putting off for a long period.
And if I can just I'll pick up and run with that just for a second. That's the thing that we've discovered over the last 8 months since we kind of entered into this Zoom world where everybody is doing meetings through Zoom or GoToMeeting, and people are getting used to this kind of way of communicating, that we saw a lot of urgency around estate planning. Certainly whenever there's a health crisis, that drives the urgency. But one of the interesting things that I've seen, and I suspect you've seen it as well, is that this situation that we're all in, is as uncomfortable and as bad as it is, and however much we might not want to be in it and hope that we get out of it really soon, has created some actually very, very interesting opportunities. I've seen certainly in our business the opportunities that have shown up. It's shown us opportunities to do things differently for our clients. But what I've noticed with our clients and prospective clients is that it's made certain things easier. I think it's made estate planning easier because, are coming in, nobody has to come into our office for initial consult anymore. They can do it from the comfort of their own home. Some would consider that to be the safety of their own home. When you're talking about difficult topics, it's easier to do it from your own living room couch than it is in a conference room. And certainly scheduling has become much easier, but I suspect that you have found the same thing, that people are around, people are getting much more used to this kind of electronic way of being in the world because we're forced to, which makes it easier to pull things together and get ready to do the things they know they need to do.
Yeah, no, absolutely. I mean, it's one of those things that now that it's happened, I'm surprised it took so long, right? Because when I'm meeting with clients now, before it was, okay, when you have a minute, go on, log into your thing and pull up certain statements. And sometimes people say, I don't even know what that is, which is totally normal. So now if we're on a Zoom call, it's like, okay, well, share your screen with me. They could log in and I could say, okay, click this, click that, and, to be able to get answers a lot quicker. Also, a lot of these companies have they realize that paper applications are just simply not, they're not that, it's very complicated to get paper applications now. So they've gone more on the tech side where we can have accounts open, funded, right? Life insurance applied for, all these things that can be done just over the, just through different apps. So it's sped things up dramatically and it made it a lot easier for clients too. Much easier to work on that front.
Yeah. So, we're getting to the end of 2020. Maybe we'll all say, hooray, the end of 2020, although it's looking like 2021 isn't going to start substantially different than the end of 2020. But as we get to the end of the year and as we think about next year and how we want things to be different and how we want things to be better in 2021, what are some top priorities that you think people should be thinking about, whether they're young families, whether they're older families, as we approach year end and start to think about, hey, how are we going to do things differently or better in 2021?
I think it's always the resolution at the end of the year, but I think this year is one of the ones that people actually do because you have the time. We're not cutting back on a lot of things from a time standpoint, but I think simplicity is always going to be a huge advantage moving forward. And by simplicity, I just mean I meet so many people that say, you know what, I have 3 old 401k plans I just never rolled in because, like everything else, it seems like they assume it's going to be way more complicated, way more expensive, way more time consuming, right? So it's really easy. It's actually not that easy. Not that complicated to do. It's just having someone that can either guide you through the process or just taking the time to do it yourself. But I think if you simplify everything, and one of the things that mentioned in the ebook is simplifying everything, getting it on one platform where you can look at one screen, be like, here's all my money, my assets, my liabilities. I can track how much I'm saving each year. Oftentimes we have, in most situations, I work with the spouses, right? One spouse handles all the money. The other spouse is generally in the dark. And it's not because of it's not his or her fault. It's just that they just don't have the interest because they say, well, my spouse has this. A lot of these portals, they allow you to just be able to say, okay, well, I can go on my phone and see where everything is real time, right? Things like that, just bring it all in and putting together some kind of savings plan, right? I don't care if it's $100 a month into whatever, right? It's just some kind of plan to be moving in the right direction and being able to track to know that you're moving in the right direction, I think is big. Also for young family, I'm 5, my kids are 5 and 2. I think life insurance is an incredible advantage from the estate planning standpoint. It just simplifies everything. So, when we did our planning with you, David, I think that's my 2 biggest takeaways from that were, one, I know enough to be dangerous. So I said, well, we don't need to put all our assets in a trust, and you walking us through and saying, well, let me show you what a disaster it will be if you both die with the house, right? So, taking through the process. So I think having that in order. And then my other biggest takeaway was my wife and I both have a bunch of life insurance and realizing that if something happened yesterday, today, we're okay. If nothing else, while other things are being dealt with, at least we know that that's going to be a way to make sure that, we're both okay. Our kids are okay financially, at least. So those would be the simplify everything and make sure you have enough insurance protection.
And I heard, when you say, put $100 a month towards something, I'm going to plug 2 more things here for anybody who is joining us or anybody who might watch this recording. If you've got young kids, 529s, the best thing that Paul and I ever did for our kids was to fund their 529s. I've got one out of college now and second one in the middle of college now. And The greatest feeling I ever had was when my very first tuition bill came in the mail the summer before my oldest daughter started at Quinnipiac. And I didn't freak out. You know, when you get a college tuition bill, that's a pretty big bill. And Quinnipiac wasn't cheap. And I didn't freak out about it at all. It was as simple as making sure a transfer came out of the 529s. And then the other thing that Paul and I have done as our kids have become adults is that when each of our daughters turned 18, we started a Roth IRA for them. And our thing was, we're going to put $100 a month into these for you until you graduate from college and you have a job. And then we're going to let you pick it up and move it forward. But at least when it's your turn to pick it up and move it forward, there'll be a good start there. And so our oldest daughter, Hannah, has done that. She's working. Now she's contributing to her Roth. In the meantime, we're contributing to Sadie's Roth. When she graduates from college, it'll be her job then. We'll turn it over to her. It'll be her job to pick it up. But those were two things that somebody once shared with me. And I figured, while we're talking about $100 a month, it's simple stuff. The other thing, but if there's any grandparents on the call, the other thing that my mother did for my kids and for all of my nieces and nephews is when they were born, my mom dropped $100 a month. It doesn't sound like a ton, $100 a month into a 529 plan. When you start dropping that in at age 0, by the time your kid gets to their final year of college, that's basically an entire, at least this is the way it's turned out for me, basically an entire year's worth of tuition. So I never even thought about senior year. My oldest daughter's senior year was paid for out of that, and my younger daughter's senior year will undoubtedly be paid for out of that as well. So, any grandparents on the call, you want to do a really cool thing for your grandkids when they're born, open up a 529 for them and start dropping a little bit of money every month into it and just let it go, because the tax deferred benefits of all of that are absolutely tremendous.
Yeah, it's funny. Those are probably like two of my favorite products. I think there's so many misconceptions, especially around 529 plans. But I think they're incredible, and I've had them for my kids. And it's funny because one of my favorite things about the 529 plan is that most of the companies you could do them with, they give you a link, so I could send it to people. And if for birthdays and whatever the case may be, Christmas, say here you go. So I send it to my parents every Christmas. I say, if you bring another crappy toy in my house that I'm gonna trip over, you're not gonna come back. And just throw some money in the college plan. And they can go on, they do it, they do it themselves. So the plans are incredible. And then also, I just see someone posted a question: is 18 the earliest you could start a Roth IRA? You could do it anytime you have earned income. So you could have a 10-year-old that has taxable income of whatever. They could put up to 100%. It's 100% up to the $6,000 limit of their earned income. So that's how much can go into a Roth IRA.
And John, I wanted to point out to everybody who's on the call and anybody who listens to this that you have created an ebook. It's just a really cool ebook called Financial Planning Basics for New Parents. Just share a little bit about why you created the ebook and what the book is really all about.
Yeah, so I again, having most of my clients being in that, personally having young kids, and I deal with so many friends and family and clients that are just struggling with little kids and trying to find the time to focus on this stuff. So it's really simple. It was I think 3 pages, which turned into when they made it pretty, it looked a little bit longer. But it's just really a simple breakdown of all different kinds of financial aspects that young parents would want to think about, right? College planning, retirement planning, insurances, general savings. It's something that I get the questions all the time. So I figured, I'll put the top questions that I get or top topics, and just wrote a little bit about it. It's pretty laid back. Try to be a little funny in time to time in it, and but I think most people that I've sent it along have found some value in it, and that's no cost, just something to help out a little bit.
Yeah, and I see we've dropped a link to your ebook in the chat. So if anybody wants to download that, you can go ahead and click on that link, and you can download John's ebook as a PDF. And by the way, if any questions are coming up for anybody, you can drop those into the chat as well. We'll leave a little bit of time at the end and can go over any questions that have come up that we haven't already talked about. Um, John, anything else
Yeah,
that you wanna share today?
just that the topic of financial planning really isn't that complicated. I think it's a good, an example that I've given, when my wife and I got married, we got married in church. We had to go through those classes just to get married. And at the time, it was, I was in total survival mode because I have such ADD. But, when I look back on it, it was the only time that we ever actually said, okay, we're going to focus for the next 15 minutes and only talk about how much of a pain in the ass my mom is, or how are we going to deal with money, things like that. So a lot of times when you have someone that's in your corner, it's simply saying, okay, we're going to take, an hour twice a year, and we're just going to focus on our money. And then we go back to our lives and know someone else is running with it. So it's not that complicated. I think people just need to make a very little amount of time to just, have a conversation about money.
And just share with everybody, if people want to reach out to you, to contact you, how can they do that?
So I just put my email address in the chat. I'll put my website as well. And on the website, if you want to book a meeting, there's no cost, just to have a conversation. So if you go on the website, you can check me out. Check me out on LinkedIn, and there's also links to book a meeting. So you could just go on, just my calendar will pop up. You could pick a time to chat, and I live and work in Concord. Happy to do face to face, but most people just prefer Zoom right now. So always happy to get on a call and talk about it.
And one last thing I want to add, and Deb, if you can have the ability to drop this into the chat, it'd be great. Our end of year planning checklist. One of the things that we share with our clients at the end of every year, and we're about halfway into November now, so we're getting close to doing this, is an end of year checklist. Financial planning, estate planning, both are not kind of do it once, don't have to think about it again kind of things. Obviously, in financial planning, you want to be rebalancing a portfolio and kind of looking back over the year and see what happened. And again, think about the ways you want to do things better next year. In estate planning as well, things can happen that maybe clients don't realize have an impact on a plan. And it's one of the reasons that we invite clients to come in at least every 3 years for ongoing plan review meetings. But even more frequently than that, I think there are checklists that people should be reviewing to make sure that something didn't happen during the year that they didn't realize might have an impact on the plan. Sometimes it's pretty simple. We had another child, I changed the job, I got a new life insurance policy. Whatever, one of my kids turned 18. I can see we put our checklist in the chat, so all can feel free to download that. And for our clients, we send that out at the end of the year. Let's see if any questions that had come through that we did not otherwise take care of. It looks like we may have kind of grabbed the one or two that came through along the way. Seeing no other questions in the chat. Just double check, I see it move. John, I want to thank you for joining us today. For everybody on the call, I want to thank you for joining us today. We will be back in a month to do this again. But John, I really appreciate your time. And
yeah, absolutely. Thank you. There is one quick question I could address that just came through from Kathleen about financial portals. So there's a couple. Most financial advisors have an account integrator that pulls everything in that you would, you just ask your advisor if you don't have one. I know a great one, but you that have a portal you can use. Otherwise, mint.com, mint.com is free, and it does everything. It pulls everything in. It's owned by a big conglomerate, so they sell your information. You get pop-ups and all that stuff. But if you could deal with that, it's free. Otherwise, I would just ask an advisor to set that up. But it will definitely make your life a lot easier.
And I've used Mint from time to time, and it's actually kind of cool to drop in there and let it do its thing for a minute or so when you first log in, pull up all of, connect with all your banks and your investment accounts and pull everything up there and give you a very easy, quick snapshot um, of everything. I'm an Intuit user, both for QuickBooks in the office and Quicken at home. So it's a natural for me. But it's great to see all that stuff in one place.
Yeah, it's great. Well, thank you again.
Yeah, we were happy to have you, and look forward to talking to you again soon. Everybody on the call, look forward to talking to you again soon. We'll be back to do our next pep talk in about a month. In the meantime, have a great holiday, everyone, despite the circumstances. I know it's a little more difficult for everybody, but however you are celebrating Thanksgiving, I wish you the very best and hope that all of your families and you stay happy and healthy and safe throughout the holiday season. Thanks for joining us, everybody. We'll talk again soon. Take care.
All right.